Ladies and gentlemen, good day and welcome to Styrenix Performance Materials Limited conference call. We have with us today from the management of Styrenix Performance Materials Limited, Mr. Rahul Agarwal, Managing Director, Mr. Bhupesh P. Porwal, Chief Financial Officer, CFO, and Mr. Chintan Doshi, Manager Legal and Company Secretary. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Further, on the behalf of management of the company, we would also like to remind the participants that this call is being conducted subject to and in line with the disclaimer mentioned in the investor presentation as is available on the stock exchanges. I now hand the conference over to Mr. Bhupesh P. Porwal. Thank you, and over to you, Mr. Porwal.
Ladies and gentlemen, Namaste everyone. I am pleased to welcome you to our Q2 and period ended September 25 conference call. Our expansion plan is going on as per schedule. We will update on these more once further details are available. Coming on to our financial performance, about the quarter, financial year 26 highlights. Sales volume for Q2 was 45.2 KT versus 51.8 KT in quarter 1 financial year 26. That is, it has decreased by 12.7% and it has increased by 8.1% compared to Q2 financial year 25, which was 41.8 KT. Revenue stood by 615 CR in Q2 FY26 versus 721 CR in quarter 1 FY26. That is decreased by 14.7% and decreased by 5.8% compared to Q2 FY25, which was 653 crores. PBDIT stood at 81.8 crores, that is 13.3% versus 86.1 CR, 11.9% in quarter 1 FY26 and 105.2 crores, 15.9% in quarter 2 FY25. For the half-yearly highlights of the standalone, sales volume for H1 FY25 stood by 97 KT versus 90.1 KT in FY25. That is, it has increased by 7.6%. Revenue stood at 1336 crores versus 1352. That is a decrease by 1.18% compared to H1 FY25. PBDIT stood at 167.9 CR, that is 12.6% versus 197.4 crores in H1 FY25, which is lower by 1.9% compared to H1 FY25. The company had incorporated wholly owned subsidiary Styrenix Performance Materials FZE in Zabza, Dubai, UAE on September 10, 2024, and during the quarter and half year ended September 30, 2024, no transaction had been carried out in the wholly owned subsidiary. The group had acquired Styrenix Performance Materials Thailand Limited in January 25, and the consolidated results of the year ended March 31, 2025 and half year ended September 30, 25 includes financial results of the subsidiaries. Therefore, the financial results for July to September 24 and half year ended September 24 are not comparable with the July to September 25 and half year ended September 25 consolidated figures. Consolidated numbers now for the quarter 2. Sales volume for quarter 2 was 57.5 KT versus 67.2 KT in Q1 FY26. That is, it has been decreased by 14.4%. Revenue stood by 799 CR in quarter 1 versus 943 CR in quarter 1 FY26, decreased by 15.32. PBDIT stood at 88.4 CR, that is 11.1% versus 99 crore, that is 10.6% in quarter 1 FY26. Consolidated H1 highlights. Sales volume of H1 is 124.7 KT. Revenue stood at 1742 CR in H1. PBDIT stood at 188 CR, that is 10.8%. This is all about highlights for the quarter and H1 ended September 25, and now we may proceed to answer the questions you may have. Thank you very much.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Ketan from SMIFS. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, during the quarter, we witnessed gross spreads on quarter-on-quarter basis has improved. But sir, when we look at the raw material price performance, like for styrene, acrylonitrile, most of the prices have declined quarter-on-quarter. So ideally, sir, this quarter there should have been a component of inventory loss plus lower product mix. But the numbers are looking quite good. If you can highlight, sir, so what has been the reason we have been able to buck this trend?
Hi Aditya, this is Rahul. Can you ask all your questions at one go so I can answer all of them?
Yes, sir. So second was what could be the numbers for Thailand? I missed the initial remarks. So what could be the volume figure for Thailand in this quarter, and consequently what are the EBITDA for that business? And third, sir, my question is pertaining to our outlook for the growth in the upcoming years. So most of the expansion which we have highlighted for phase 1 of ABS, is that scheduled to come on stream by next year of ABS, so by the mid of 2026, and any change in the capex plans, any upward revision in the capex? So that is the third. And sir, fourth question is pertaining to how you see the ramp up of Thailand. What numbers are we looking for volumes for this fiscal FY26 and for FY27? Yes, sir.
Okay, thanks Aditya. See, with regards to the gross spreads, essentially, if you look at the volumes in terms of a product mix, we have actually had a very flattish kind of a polystyrene business because there has been a significant impact on household appliances, and air conditioning, for instance, has got more severely impacted, and the sales in polystyrene have been, in spite of that, have been flat for us. We have not had any reduction, but no growth either. In the case of ABS, there has been some growth. So overall product mix has been more in the case of ABS, there is a larger percentage in this versus the last quarter. While the prices have come down of raw materials, even the finished product prices have come down as a result of that, because a lot of the business, as you know, is formula driven. So the overall spreads are better because of course, a larger kind of an ABS, component that we have. In terms of inventories, we don't carry very large inventories, so we don't see very large kind of inventory gains or losses, at least in the case of India. So we don't have that issue here. Going forward, with regards to Thailand, our volumes are essentially kind of declined a little bit over the last quarter. So overall, for this first half, we have done about 32 KT. So we had 17 in the first quarter and 15 in the next quarter. Overall, for this year, we are estimating the growth to be flattish in Thailand. I think next year also is when we will start seeing some uptake in volumes. Overall, there is a positive contribution so far in Thailand. But overall, in the entire year, we are not giving any, kind of forward-looking EBITDA projections right now because there are some level of uncertainties around Thailand. We do believe Thailand to be a medium to long-term value addition for the business as opposed to a short-term gain that we see for the organization. I had mentioned earlier the logic for Thailand has been around technology, around market access, around several areas, which obviously will yield results only after a period of time. Going back to your third question with regards to growth for this business, we are anticipating to be in line and finishing the year, at least for India, how we have mentioned in the past. So to the extent we have expanded some of our capacities, we do believe we'll be able to get the benefit of those capacities translated into sales for the entire year. So there have been some sales which have been lagging, I would say, in the case of polystyrene, especially in the first 2 quarters. But we do believe that, this kind of some seasonality effect and some issues which have happened will get resolved, and we will see the next 6 months to be generally better in that case as well. So overall, volumes will still be able to catch up to the levels we have indicated earlier. So we'll still have a reasonable growth over last year. In terms of capex, I think we have mentioned some of that in terms of cash which has been used for investing activities in our presentation as well. So capex has already started. We do believe that whatever capex we have planned for phase 1 for ABS will be completed more or less in time, which is sometime during the next financial year. It is hard to pinpoint an exact date and month, but we do believe it will happen, maybe in the mid to the end of kind of next financial year. So around that time. With regards to, I think Thailand volumes, you have asked, and I've answered in the question again. But since you have mentioned as your fourth question, I'm again addressing it, that we do anticipate the volumes to be flat in what is done in the first half. Similar volumes we'll see in the second half. But, as our validations come through for our products, and we are able to take benefit of the entire sales teams which have been set up in those regions. We mentioned in our investor presentation that in addition to Shanghai, we have also opened an office in Vietnam, and we've also got our marketing reps in Japan and Korea and other places as well as Indonesia. So all this will take a little time to yield results, but we do believe in the coming year or in the medium term and long term, this will yield the volume growth that we are looking for.
Thank you, sir, for that explanation. So just 2 follow-ups on this. Sir, you mentioned on the raw materials part that we are keeping very minimal inventory. But I believe, sir, most of the raw materials like styrene and acrylonitrile are imported. So ideally, they should be having a longer time because we are importing it, and there is always a transit time. Plus, we should have it in our inventory pipeline. So ideally, that would be higher. Otherwise, the butadiene would be lower. So still, you feel like this raw material management is quite easier in times of falling RM prices. We can easily manage the things and quickly
So if I look at even styrene monomer prices, while they might have fallen, if I look from January till this month, if I look at the average of the last quarter versus this quarter, there has not been a significant decline. In acrylonitrile, of course, there has been some decline, but acrylonitrile again is a smaller percentage of our overall volumes, and so is the case of butadiene. Because if you look at the entire business, I think styrene is again a little bit larger component between polystyrene and ABS. And there the decline quarter on quarter has not been as significant as it has been, say, from January to this part. So, we have not seen a much bigger difference there. So, and again, while we are importing the styrene, and styrene is, of course, significant in terms of our overall inventory, it is not very significant or very large in terms of our overall sales. So we are still able to manage that quite judiciously.
Got it, sir. So just one last question. Sir, your commentary around Thailand has become a more onto the cautious side. You had also highlighted, so there are some uncertainties and we are expecting slight uptick in FY27 in next year. If you can, sir, elaborate more, what changes have we seen, like post the acquisition, what changes and on the ground, and anything surprise has been come to our notice or anything new which we have found out, which is why our guidance is a bit changed here.
So we have never given any guidance around Thailand earlier. We have always stated that in the case of Thailand, as far as the operations are concerned, and the exact value that we will derive from the operations in terms of EBITDA and volume will take a little bit of time to stabilize. There is no change from that commentary to now what I'm saying. It is the same. And in fact, I've always stated that, as far as that value which will come from Thailand is a significant long-term value, and that is, for most shareholders, I think that is of vital importance. So, we reiterating the same thing. I've always stated that in terms of short term, which is like, 2 quarters or 3 quarters from, not even 3 entire quarters from when we have acquired the business, there is going to be a little bit of time which will be required to, get that full benefit. So it is exactly the same what I've been stating in the past. There is no change in it.
Got it, sir. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Good set of performance on the EBITDA margin front. So my question first is regarding the incorporation of a wholly owned subsidiary in Dubai. So what is the purpose of this? So that's the first question. Second question will be on the third quarter outlook, which you've given in the presentation. So this translates into a sort of a Q1 type of performance in terms of volume, what we have done. So is my understanding correct? And third question will be in terms of competitive intensity, as our PS capacity has gone on stream, and then further ramp up will happen in the ABS capacity over the next 2 quarters. So do you see some pressure in the market in terms of margins on the ABS side, as its capacity gets ramped up? These are my 3 questions. Thank you.
So your first question is around Dubai.
Yeah.
Essentially, we have, when we took the business from INEOS Styrolution in Thailand, it seemed the advice that we got, was that eventually Dubai would be a good destination from a long-term, business structuring perspective for Styrenix as a whole. As you know, currently in Styrenix, we don't have any export sales in India. Thailand, we do, of course, have some sales, going to Asian regions. But if you look long term, in terms of sales to the Middle East, to Europe, to US, we believe that Dubai would form a good base for the organization long term. And keeping that in mind, in terms of future planning, which should be efficient from, functioning, operations, tax, all the above, it made sense to incorporate this. So that net we see an advantage of this kind of a structure and entity which we have formed in Dubai.
So basically, it's like a sales office for exports, right?
Yeah. So it's also kind of a holding company, for the Dubai entity, and also it will work as a sales function, right? So there will be a lot of sales which will happen into the Middle East, which is an area which we have now started exploring from India as well into the GCC. There is an opportunity there, and Dubai, of course, is a correct base for us to engage in those sales activities for GCC, for some of our capacities, say, like you mentioned, about PS competitive intensity, and that kind of ties in there, where we do believe there are more opportunities which will come for PS also in that region, also with ABS, and that may materialize quicker, once we have additional capacities to offer in ABS as well. But in the case of PS, for instance, we already started, looking at exports in that region, and again, Dubai becomes the base for that. So there are multiple benefits of being in that region, and I'm just enumerating a few of them, in the interest of time here. When we look at the third quarter outlook, per se, we have not given any guidance per se in any of our presentations. All I have mentioned is, if you look at the annualized volumes that are available to us for sale versus what we will be able to sell, right, in terms of capacities versus sales, I think we will have an opportunity, to sell more, and we will be able to do that because we do believe that the demand will remain robust, right? So the outlook is a generalized outlook for the industry as opposed to an outlook for our company specifically, because we have spoken about appliances like refrigerators, we have spoken about auto industry, we have spoken about, small appliances, and we do believe that, there has been muted demand, in the last few quarters, especially on PS, And somewhat in ABS also, of course, the demand has been good for us. But PS specifically, we do believe that the demand will be better, right, going forward, which is generally the case year on year as well. So essentially, that cover up we will do in the next 2 quarters. It's not just Q3, but even Q4 for that matter. So overall, that is a market outlook. And as far as our outlook is concerned, for ABS, we are running relatively full, and we anticipate that will be the case. With whatever competitive intensity has been, we have not seen any significant increase in that so far. And with whatever competitive intensity, we have not seen any significant change either in terms of our margin profile for ABS. We'll see how that pans out, as that comes. As far as our own capacity augmentation is concerned in ABS, that again, we have some time before that happens. Like we have mentioned, it will happen in the next financial year at some point of time, between the middle of the year to the end of the year. So till that time, whatever ABS capacities we have available, we don't believe there will be any challenge in being able to utilize that entire capacity.
Noted, sir. And sir, one question. As you mentioned, your PS sales could be higher for next 2 quarters. So does it mean that the EBITDA per kilo, what you've done in second quarter, could be softer given the PS sales will be higher?
So it can happen, but again, very difficult to predict exact numbers, Dhaval, because what also happens in Q3 and Q4, specifically if I look at Q4, the overall margin profile also improves slightly. Specifically, there is a lot more sale, in the air conditioning and the refrigerator market. A lot more HIPS is sold as well at that time. The volumes effectively are much, much higher than what we are doing today. And there, again, the EBITDA per kg is higher than, say, for general purpose polystyrene, for instance. So there is those things also which play into it. So to give exact numbers of how that would play out versus, the first half is a little bit difficult to give. But generally, you would be correct that there would be some potential impact on the blended EBITDA per kg.
Noted, sir. Thank you. Thank you very much. I'll get back in the queue.
Sure.
Thank you. The next question is from the line of Dhavan Shah from Alpha Accurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So first, my question is on the standalone business. Despite there are some headwinds in the domestic market in terms of the auto volumes and then the consumer business also, still we have, shown the 8% volume growth. That is really a great part. And going forward, once the GST has already been cut, and there is also an assumption then that the second half can be good in terms of the auto volume growth. So you already mentioned that ABS, we are already running at peak. But in terms of the overall volume perspective, is it fair to assume that we can end this year by around plus 10% of the volume growth? Or is it largely will remain at the same level like we have done in the first half?
Yeah. So if you look at, year to date, last year versus this year, year to date, we mentioned the total sales volume on standalone basis. Last year was around 89.8 KT, which is now around 97 KT, right, for the first half. When I mentioned also the fact that polystyrene has been largely flat, which means all of that growth has essentially come from ABS. Or most of it has come from ABS. So, you can derive very quickly that the growth is probably more than 10% or thereabouts as far as ABS is concerned, right? If I look at ABS standalone. We don't give segmented numbers, so I'm afraid I'm not able to share that with you, but one can derive that in a rather straightforward manner. Going forward, also we anticipate the same to be the case. Yes, like I mentioned, polystyrene will also do potentially much better in the second half. So overall, our volumes will remain, to the tune of whatever 10% growth as well, because we've already seen close to, between 7.5% and 8% growth, or 8% growth in the first half. So we do anticipate in the second half to be a little bit better than that. So thereabouts 10%, not committing to a specific number, we should be able to achieve. GST cut, yes, we are anticipating also to see some benefit from that. But again, we are not sure exactly when, how that kicks off. The demand that we have seen for our products has been robust. We also anticipate, auto growth to remain robust, going forward. Especially Q4, we see auto growth is generally quite good. And even for the next quarter, for both the four-wheeler and two-wheeler, again, we are expecting reasonably good growth. So all these sectors will ensure that we don't have any problem meeting our volume targets.
And also because of the the volume growth can be good compared to the H1, and the raw material price is already suppressed. So is it fair to assume that the spread would also improve because the the market demand will improve, so eventually I think the spread would also improve? Is it a fair assumption? Or we will pass on any decrease in the raw material to the end users, or will keep some benefit in terms of the sales price?
So generally, as we have mentioned in the past as well, we do a lot of formula-based pricing with a lot of our customers, and in that it's passed through, right? So if the prices go up or down of raw materials, generally that's agreed upon wherever there is a contract. Now, even if there is no contract, with a lot of the other customers as well, we have some kind of a formula. So we do believe it will remain passed through. Wherever we have some business on the spot market, yes, there could be some opportunities. But, the competitive intensity right now in the market, and has been the case in the past as well, has ensured that there is no significant upside, right, over there. So we don't anticipate any major changes, frankly, going forward.
Understood. And in terms of the Thailand, if I look at the other cost and the employee cost, if I annualize both of these things, I think employee is roughly 65-70 odd crore on the annual basis, and the other cost is roughly 200 crore on the current revenue, annualized revenue of 800 odd crore. You already mentioned that the next year can also be soft, maybe for Thailand in terms of the volume growth. So is there any room for restructuring these two costs, employee and other costs, to improve the EBITDA pattern over there?
So, in Thailand, we are doing something, but, today, to translate that into significant numbers and trying to factor that into a calculation is not something which I would, recommend strongly to do, whether the employee cost or the other expenses. Now, there will be areas of productivity improvement, there will be areas of technology improvement, and of course, there will be significant areas for improvement in sales, right? So it will be a stepwise process. It will be a gradual process. And, like I said, there is a way of working, in that region, which we need to respect. And we need to be able to ensure that the asset is able to deliver how we want in the long term, as opposed to looking for short-term gains.
Right. Because, I was comparing the standalone other costs, which is also around 240 odd crore on annual basis, versus our revenue in standalone is around 2,500 crore on annual basis. And if I compare it with Thailand other cost is also 200 crore right now. So I understand that the inflation is lower there.
Right. So I think that is the biggest challenge, right, in Thailand, is the capacity utilization. But, one must understand one thing here, that, we have also shifted from Ineos's brand previously over to Absolac, which in that region has not been a well-known brand. And in spite of that, we have had a relatively good success in terms of conversion to our brand, right? Going forward, we do believe that, as the sales efforts take place, the total volumes will go up. But yes, it's a process, which we have to follow and we have to respect. And making too many sharp changes can be very detrimental to the organization.
Sure. And sir, by when do we expect the incremental sales from Dubai or the GCC country will start?
So again, this will take a little bit of time. We have started the process. And this is going to, of course, be more for the Indian operation only. So polystyrene, typically what happens is, you tend to run much fuller in the third and fourth quarter. So you would want to utilize that capacities when they are available again. and that potentially would happen again next year. So we have to do a little bit of balancing in terms of when we see the value in those markets versus when we have capacities. So we have started the efforts. We will start seeding the market a little bit, but the real benefit where we can get operating leverage or capacity utilization benefits would be times when potentially those volumes are a little bit leaner in India, which will again probably happen more next year, as opposed to trying to push it for the next few quarters, where anyways the demand in India is much more robust.
Understood. And the EBITDA per ton would be better in those countries, GCC versus India?
It depends on grades, but overall, what I believe is that the realizations in India are better.
Okay. But EBITDA per ton would be better over there?
I think the realizations, which means EBITDA per ton, is better in India.
Okay, understood. Got it.
Specific grades can give better realizations, but yeah, generally this would be the case.
Sure, sir. Thank you. That's all from my side.
Sure.
Thank you. A reminder to all the participants that please restrict yourself to 2 questions. The next question is from the line of Tushar Ragatate from Omega Portfolio Advisor. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So just wanted to know more about the Indian industry structure. A little elaborated answer would help a lot. So earlier there were 2 players, now it's become a 3-player industry, the ABS. I just wanted to understand the profit risk for us in the industry. And secondly, in terms of the emulsion and the mass ABS manufacturing process, what's the difference in that in terms of client stickiness? Or any risk you are seeing, from that, from the mass grade ABS. If I'm not mistaken, one of your peer, the raw material styrene capacity is just next to their plant. So in terms of logistic benefit, how we are placed in the industry of the ABS, that would be my first question, sir. And secondly, just wanted to understand the Thailand business, and I'm asking from the mid-term perspective, not the near term. For 800 crore loss book, we gave near about less than 200 crore with the tax, the tax benefits there. I understand the turnaround takes some time. Just wanted to know in terms of the capacity utilization and profitability contribution to the consolidated level, when we can see the material contribution from the Thailand business. And third would be, sir, you did some polystyrene debottleneck and ABS debottleneck CapEx historically. What was the cost for the same, and do you see that the delta with the capacity added, do you see that utilization happening to the extent which we thought earlier?
Okay. So with regards to your first question, when you spoke about profit sharing, I'm not sure how I can answer that question. I don't think I'm qualified to answer the profit sharing between different players in an industry. But I can share only the profits that we have, and that is readily available to you. With regards to emulsion versus mass ABS, so currently, to my best knowledge, the ABS market in India, where we are present in Styrenix, is dominated by emulsion ABS. Mass ABS, we have seen product being sold in some other parts of the world. Of course, one of the players has come out with mass ABS. We are not sure exactly which customers, in terms of positioning, mass ABS will occupy. But so far, we haven't seen a very big risk. One thing also for you to understand, if you look at the overall industry dynamic, is that the total market for ABS is still underserved by the existing or the earlier incumbent 2 players, right? So the third player addition, I think there is scope for to do some import substitution as well. So we don't believe there is a major risk associated with potential mass ABS also coming into the market, though we haven't really seen it so far. We will see how this pans out over the next few quarters. When you talk about the other player having SM capacity or styrene monomer capacity next to the plant, I do not believe that is correct, because there is no styrene monomer plant in India. Entire styrene monomer so far is imported into the country. There is some announcement of some capacity which will come in, but I do believe this will take a few years at least. So there is no such comparison that we can really discuss at this point. With regards to Thailand, you mentioned that you are more interested in the medium term. So normally short term, I look at, next few quarters or 1 year, and medium term would be beyond that. So I've already addressed that question where I've mentioned that in the next year, we will see some growth, and then real growth we'll see beyond that. So, in terms of capacity utilization, also right now, we are operating at much lower capacity utilization. So we did about 32,000 tons in the first half, and similar, say, next half also. And the total capacity, I think, of Thailand that we have stated is around 120 KT. So it's only about 50%, right? So that is where it stands. And material contribution I've already mentioned is going to remain where it is. If you look at the first half, it is not going to significantly contribute to the consolidated results in terms of the EBITDA or anything like that. And this is going to take a little bit of time before that there is any real contribution that we see. With regards to ABS and PS debottlenecking, I don't have the exact numbers in terms of the breakup of what we spend. But we do believe when we look at ABS debottlenecking, for instance, we have been able to increase the volumes. So when we took over the business in 22, the volumes that we were doing in ABS were close to 60,000 tons in a year. And last year, we closed, closer to 90,000 to 100,000 tons. And this year, we are, of course, doing even numbers higher than that. In PS also, we have seen similar kind of a growth pattern where earlier the volumes were to the tune of 45,000 tons. And, last year also we have seen an increase in that, and we are seeing further increases this year as well. So, all the debottlenecking exercises have been successful for Styrenix. And going forward, whatever we have done, we will be able to utilize the operating leverage out of those capacities.
So just to clarify, in the profit mix, basically, the industry profit mix, do you see any risk going forward? Why? Because sir, one of your competitor has reduced their capex plan substantially. So just wanted to know the incremental growth of 7 to 8%. Do you see that coming in for us?
So I can't comment on what the competitors are doing from a strategic perspective. I can state that for Styrenix, going forward with the expansion is going to be vital. We do believe that, we want to remain in a leadership position in this market. We want to be able to cater and serve all our customers effectively. India is growing well. There is a robust demand for all our products. And, we are just answering the customer's call essentially by doing the expansion which is needed. We do believe that with whatever current margin profile and profitability profile we have, and whatever capex plans we have planned out, we are getting a reasonably acceptable and healthy IRR on that capex investments, which has been cleared by our board. So we do believe that we are sticking to the path that we have already announced earlier, and there is no deviation from that.
Thank you, sir. It was really helpful.
Yeah.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. A reminder to all the participants, please restrict yourself to 2 questions. The next question is from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi Rahul. Thanks for the opportunity. So Rahul, again, my question is a little broader, and I believe you have answered in bits and pieces. But so when we took over the company, our belief was, we'll go with import substitution. The import will eventually come down. But now, as we see that we are increasing capacity, our domestic competitors are putting on further capacity. And we have also heard that China is also going very aggressive in adding capacities. So eventually, not in the near term, but 3 years out, do you see any pressure from due to imports or global and chances of overcapacity happening in the next few years?
Nirali, any more questions you have other than this?
Yeah. And secondly, on this mass ABS, so just wanted to understand that our belief was that getting an approval with auto OEM is a little long gestation period, but our competitor believes that we can get this in 3 to 6 months. So any view, like in your view, how long does it take to get an clearance from an auto OEM? Yeah, that's it from my side.
Okay. So with regards to domestic capacities, I think most of the information is in public domain, wherein we are, of course, going ahead with what we have planned. With regards to competitors, I don't feel it is, right of me to comment, but we know what is happening with the other two competitors, what is going on. So we do believe that as far as domestic capacities are concerned, in fact, there is a kind of a cutback in the earlier view where their overall capacities would have been higher, in fact. So the capacities are going to be actually lower based on whatever recent commentary is there from the three now players. As far as China is concerned, so one interesting information that I can give you is that even from Thailand, we do sell to China. So in the sense that while China may have significant capacities, which you are right, and they are putting in even more capacities, there is certain markets in China for which certain kind of ABS is required, where we are better equipped to produce and deliver. And we have been doing that in India as well. So a large part of the Indian market is in that segment. And we do believe that we will remain, not only relevant, but we would have a leadership position in those segments going forward. So, while imports always pose some kind of threat to the competitive intensity ecosystem, that will remain the case as it has remained even earlier. So, competitive intensity has been from the Far East. I won't name specific countries, but there have been imports coming in from everywhere. And in spite of that, we have been able to, carve out our niche and position, and that will remain the case. So there is already overcapacity globally, but that's not today or tomorrow. It has been there for quite some time since we have taken over, in fact, or even before that. And in the context of that, I think we have still, managed to increase our business. So that's something that I think we should be able to effectively manage going forward as well. With regards to mass ABS, again, I will refrain from commenting. I've already explained what I know about mass ABS. But as far as we are concerned, with all the auto approvals, we are already approved in almost all the auto companies. When we come up with new products as well, we are part of their qualification process. We are part of their value addition process, where they're looking at new materials. So, it depends on, of course, specific grades, specific products, but there is a great deal of confidence in what, the companies that we are working with have already in our ability to not only produce, deliver, but also, guarantee, not in terms of legally guarantee, but guarantee in terms of what the performance will be of the product from a long-term perspective, given the conditions that we have, say, in the Indian context. And our products are well proven, right? So we may enjoy a slightly shorter lead time also from that perspective. So there are many factors which play here in automotive, which are very critical in terms of equipment qualification. In terms of part qualification, and consequently the raw material which is used for that part. So again, validations can range anywhere from 6 months to 2 years, depending on the part, depending on the company, depending on the difficulty, or depending on the challenges associated with incorporating a new material in that part.
Right. No, and just one more clarification. So, since you said that we were aware that you have been onboarded with most of the OEMs, and you have been working with them for many years now, and they are very satisfied. So, have you ever received a demand from their side to do mass ABS, or any thoughts on that side?
No.
Okay.
Okay.
No, very reassuring. Thanks a lot. Yeah.
Yeah.
Thank you. The next question is from the line of Santosh Keshri from SKK Hoof. Please go ahead.
Thank you for giving me an opportunity. I just have one question. This is regarding borrowing level that we are seeing now in the balance sheet. Like, as far as I remember, it is something like more than 300 crore now. So it is for capex, and I can also see that there's a reduction in the sundry creditors, trade payables. So are we using this borrowing to pay off the creditors for a while, and then later on we are going to use this for capex expansion? If you can just clarify this.
I'll let our CFO answer this question. Bhupesh?
Yeah, sure. So, first of all, regarding the loan positions, I think what you are mentioning is maybe 300 crores is not our loan. So, we have roughly 120 crores of overall loans which we have. Plus, another loan which you are mentioning is that is of the acquisition loan which is there, which is in the long-term loan which is mentioned. So, these are two separate loans. So, one is for acquisition, one is for working capital. Second, regarding the creditor side, yes, the creditors have reduced, but the creditors have reduced because of some of the optimization of the buying patterns. Maybe it happens, maybe some vessels come on 27th or come on 5th. So maybe on this particular 30th September, these were paid, and maybe some goods in transit were also reduced. So it has happened by chance. It is reduced by 180 CR, definitely in the standalone books.
Thank you so much.
Yeah.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah, thank you for the opportunity again. Sir, Bhupesh, can you just confirm, so we spent 75 crores in H1, and how much will be for H2 and next year and the year after? What is the roadmap?
Regarding the capex?
Yes, sir.
So we have not mentioned any figure up till now. What we had mentioned is that we will be spending roughly 350 CR for the phase 1, which will be happening up till next year, because it is not, the spend is difficult to assess what we are doing, because a lot of things are committed by raising some purchase orders or giving some advances, and a lot of payments are done after project is complete, because we have terms after successive completion, after 3 months we'll pay. So capex outflow is something different, committed of PO is something different. And we are not mentioning those numbers because it is too complex to understand right now how much PO is given and how much this will be too complex. But as I also mentioned and MD has also mentioned, the capex plan as per schedule is going on.
Okay, so as per the cash flow statement, 75 crores is towards is shown as under investing activity. So for the next 6 months, so this is to understand how the debt on the balance sheet will move in relation to the capex spend and the operating cash flow expected. So can you help me understand that?
Can you repeat it, please? Because you are referring standalone or the consolidated one?
Console number.
Okay. So these are the two different things, because when you are talking about India capex, we should talk about the cash flow of the India standalone, correct? Which has 40 CR right now, what we have paid in this quarter. And what was your question, sir? Again, can you repeat, please?
Yes. So on a console basis, we have spent 75 crores, right, in H1.
Yeah.
So in the remaining part of the year, how much we will be spending? And on a console level, what is the, I just missed the previous conversation with the participant regarding the debt on the book. So what is it that right now, and how will that look in the up to next 6 months, up to March?
So at the console level, means maybe at Thailand, we will not be having more investments anywhere now, because initially we had some investments in terms of IT infrastructure and related things, so we will not be having any capex. We don't have any capex plans for Thailand at present. It is not required also. And in regards to India standalone, as I mentioned just now, the capex plan which is there of 350 crores, which we'll be spending up till next year, and that will be continuing as such. As I mentioned, in India, it was 20 CR was the loan position, 20 CR. And up till now, whatever capex payments we have done from our internal accruals. So there will be borrowings definitely in near future, looking to the requirements and all that. But right now, it is not there up till 30th of September for any capex requirements separately.
Understood. So, this 350 crores, so how much have we spent out of that?
So as I told you, out of 350 crores, if you really see the spending, the overall spending in this capex plan for up till in this 6 months is 40 CR. Yeah. But it more depends upon how much purchase orders we have raised and how much we have committed to the vendors for those things. So all long lead items have already been placed with some advances and all that. Okay. So, and the cash outflow will flow after the projects also, depending upon the terms, what we are keeping as a retention money for better complete and good implementation of that project or particular equipment.
Okay, because I thought this 40 will have some maintenance capex also for our existing capacities and
So you are correct, it will be there. So maybe last year also in the last quarter we had given some long lead item advances. So as I have been telling again and again, we are not publishing separate figures every quarter how we are spending on those things. Yeah.
Correct.
And nobody can do that and does that also, correct? Yeah.
No, I just wanted a broader picture because, I mean, for us, what matters is the next 2-3 years. Yeah.
The capex spend is for 2 years, we will do within those 2 years. Yeah.
Within that. So we'll be spending 350 crores entire capex till next phase 1, which will be coming by H2 of FY27, as sir just mentioned, correct?
I didn't mention H2. I mentioned it will be in the next financial year, between the middle to the last part of the year. So we don't know exactly which month and which quarter, but it will happen next year sometime in the middle of the year.
Understood. Okay, sir. Thank you very much.
Thank you. The next question is from the line of Kunal Shah from Enam Investment. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on the good set of numbers. I have 3 questions, Rahul. One is, if you see there's been an 85 crore increase in short-term debt in Thailand entity. Just wanted some clarification as to why the debt was taken there. Then the second question is on the working capital cycle. So where do you expect it to settle by FY26 end? And the third question is on the management bandwidth. What are the key 3-4 areas where your bandwidth is being occupied currently? That's it. Thank you.
Yeah. So Kunal bhai, thanks for the questions. Yeah, I will answer the first one. And so about the cash flow, yes, 90 crores has been utilized for the working capital. The requirement comes because we had built up some inventories. There are 2 reasons for that. First of all, we were trying to see whether the assets which we have bought can run at a full pace when it is required. You know, right now capacity utilization is not there, but we wanted to be sure about what happens when it does. So for 2 to 3 months we have run and we had built up inventory which will definitely be utilized for the future. And this is the main reason why working capital was required and we have utilized that working capital. So going forward, when this all sales will be done slowly and this requirement may come down. Yeah.
So in terms of management bandwidth, Kunal, of course there is a fair amount of project work which is going on in India. There are set of challenges when we are doing brownfield expansion within India. And we want to ensure that we do a timely execution of these projects and bring up the capacities as and when required. So that obviously takes us some amount of time. I won't give you exact percentages, but you'll get a sense.
Yeah.
In terms of Thailand, of course, increasing sales there, ensuring that we are able to correctly leverage and position, with a lot of the key customers in that region, which can also help us in India and vice versa. That is more effectively utilized in terms of the synergistic benefits. is another area which has to be properly handled. And again, in terms of executing in both the sites, wherever we are lacking, in terms of capabilities, those have to be augmented, right? So we have done that in terms of the sales functions, we have done that in terms of projects, and of course, in other areas like supply chain and, R&D as well. So there is a lot of development happening for new products, new grades. So there is, bandwidth which is required across these 3 or 4, I think, critical areas where we are spending most of our time.
Great. Thank you, Raji. Thank you so much.
Sure.
Thank you. The next question is from the line of Aditya Ketan from SMIFS. Please go ahead.
Thank you, sir, for the follow-up. So my 2 questions are, first, on the Thailand acquisition, what was the headcount reduction, sir, we have done? Like we were highlighting, we have done some headcount reduction. Second, sir, what was the product mix in Thailand earlier and what it stands today? And continuing on this, sir, I believe we have mentioned earlier that we were having a 25% market share in Thailand. If you can, sir, give this numbers like what was this in 2021 and how much has been the loss in market share today?
So we have not really had any headcount reduction in Thailand. Aditya, in fact, Thailand is a fairly lean operation in terms of headcount. We have only about 164 people in Thailand across all functions, which is a relatively lean structure. In fact, we have added some salespeople because earlier the sales organization was different in terms of, there was the INEOS global system which was working as a sales organization, but we have added our own salespeople. Net, in terms of the total cost to the company, there is no significant impact. There is some small reduction. In terms of product mix, there is no change because, again, we are not making polystyrene over there. We are only in ABS and SAN. So that product mix is very similar to what it was. Of course, if you ask me what it was, a few years ago, I don't have that data also because that is data which has not been necessarily shared by INEOS. We only know bits and pieces again, but there is no significant change from what I understand. In terms of market share in Thailand, what I meant is 25% of our sales actually go into Thailand, and that is also the same. Thailand itself is a larger market, and we have a smaller market share in Thailand than 25%, maybe closer to like 10% of the Thailand market, which is also similar to what it is today. So we haven't really lost much market share. There has been, you can say, maybe 5 to 10% loss in overall volumes, but that is kind of evenly spread, between China, Thailand, all the spaces. And that has been mostly on account of the transition that we have had from the INEOS brand to our local Indian brand, which is Absolac, which is now a global brand. So that transition has taken a little bit of time again because of validation. Even though, if you look at the 4 M's between man, method, machine, and, I'm forgetting the 4 M, but anyways, between the 4 M's, all of them are essentially the same, but the brand has changed, right? So that has required some validation, and we are confident we'll get that business back as well. So overall, there has not been any significant loss, but yeah, 5 to 10% market share has been lost on account of that transition, which we will recover.
And sir, so post this acquisition, have we added any new customer? And what has been our discussions with customers? Like, is it better compared to earlier? Like, what is the feedback from customers we are getting in terms of procurement of the volumes and providing the continuing support? Is it better compared to earlier, or is it more or less the same?
So, we obviously have positive feedback from customers. We have positive engagement with customers. We have been able to retain, I said like a large part, like 90% of the business we have been able to retain, right? Which basically means there is some level of confidence that the customers have because they know the product is coming from the same plant, it's coming from the same set of people, all of that, with the same formulations and the same quality. So we are maintaining that, and hence we also don't want to make too many sudden changes over there. We want to maintain that with most of our customers, and that also will bring about the confidence that we need to increase the market share. So there is no difference, but all those discussions, some of the new customers that we've also brought in, have not really translated to very large volumes today, right? Which we can see in the numbers. But that will happen over a period of time. So again, like I said, this is a gradual process for which we need to give a little bit of time.
Sir, onto the Thailand plant, what is the outlook? When can we reach the peak utilization from the current plant? 2 years, like 5 years, 6 years down the line?
Yeah, it will take some time. So again, we are not giving any forward-looking statements in India or in Thailand, and I will refrain from doing that. But like I mentioned, in the medium to long term, the capacity utilization will definitely be significantly higher from where we are today.
Got it. Thank you, sir.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I will now like to hand the conference over to Mr. Chintan Doshi for closing comments.
Yeah. Thank you everyone for taking time and showing interest in the company. And we look forward to answering you in the next investor call, which will be announced at a suitable time. Thank you.
On the behalf of Styrenix Performance Materials Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.